Hi everybody, Jeff Yasteen here. Make sure to follow us on YouTube, follow me on Twitter at Jeff Yasteen, and follow me on Facebook at the username Jeff Yasteen1. So I'm going to keep this video on the short side today, mainly because I think we're going to see a lot of volatility, and I want to put that into perspective. I want to put it into context for you. Number one, we cannot forget the influence of the major tech stocks. Now that might seem obvious, but we have to remember, like for Facebook, Amazon, Apple, Netflix, Google, and we can talk about Microsoft and Tesla and maybe Nvidia as well. When those stocks, just a handful of stocks, make up more than 15% of the S&P 500 and far more than that for the NASDAQ 100 and the NASDAQ Composite Index, just a little bit of selling across the board on those tends to drive everything down. And that's certainly what we saw in all three of the major indexes on Monday. And what I don't want you to do is think, oh my gosh, I got to go completely to cash. That's the worst thing you can do. And I'm talking about investing here, right? I'm not talking about trading day to day. I'm talking about if you're somebody who's looking to buy stocks and you're holding them for at least a handful of weeks, if not months and several years, you're looking for opportunities, real opportunities. It's important to go slow on these sorts of things because otherwise you wind up at the end of a yo-yo and you're just basically completely out of sync with the market. So it's better to go slow because quite often on those days when you're like, oh my gosh, I've got to go completely to cash. And right at that moment where you start selling out of your positions is the moment when the market begins to rebound, and then you're basically left in the dust as the market moves higher from there. And again, it can also be a very much an up and down sort of process. It's not all completely down, just like bull markets are not all completely up. So keep that in mind as we go forward here, right? No quick moves if you're looking to invest, if you're looking to have a plan regarding the market. The other thing is sentiment. When you look at the investor sentiment, especially over the last couple of months, it's been very, very bullish. And, we can argue about how bullish are the extremes of all that, but it's people are pretty optimistic out there. And when people feel that way, that's usually when Wall Street tends to sort of pull the plug on things and pull the rug out from unwary investors. So keep that in mind. Another way to view all this is to talk about the NASDAQ. Look how far above the NASDAQ is above its 200-day moving average. As we're going into Monday's session, the NASDAQ, from a points perspective, was about 15% above its 200-day moving average. Now, what does that mean? It means that the NASDAQ could fall 15% and it would still be considered bullish if you're somebody who's looking at technical analysis. A stock or an index that's at its 200-day moving average or staying above it, generally it's a pretty good sign. So, this could easily just be a pullback, and if you're selling everything and just sort of panicking, that can mean trouble for you and for your portfolio. So keep that in mind as we go forward here on that point. The other thing is talking about the pandemic. All right, we're heading into the winter months, and as the health experts have told us, that's usually not a good thing when it comes to a virus like COVID-19 or frankly for the flu and those sorts of things as well. New cases are up, but when you look at the charts for fatalities, they're up in some areas, but like here in Florida, it's generally been more or less flat. Now, I don't want to say that that's like a great sign. I'm not an expert on these sorts of things, so I don't try not to claim to be. But I do think overall that's showing that medical professionals have more tools at their disposal. Those are good things. The other aspect is the developments on the vaccine front. And the other day we saw AstraZeneca come out and say that they're seeing immunity responses for their proposed vaccine in testing that's been ongoing here. So those are all good signs as well. And what I'm trying to say overall here is that we have to keep our perspective on things, and that we may see sharp selling related to all of what I've mentioned, as well as uncertainty regarding the presidential election and uncertainty regarding who controls Congress, or if we have a split Congress going forward after the election. But at the same time, we are also what could be the back end of the worst part of the pandemic, meaning that lots of stocks that have not done very well so far, we could see better buying in those. And I think that's what we're going to see in the days ahead. So stepping back and trying to view the forest instead of the trees, the sell-off like we saw on Monday, and I expect to see more selling in coming days. This is how markets change leadership. So keep your focus on that and try not to think so much or focus so much on what's happening in the big cap tech stocks. That's where institutions are heavily weighted, and frankly, that's where a lot of individual investors are heavily weighted, and that's understandable. And I think, and I've been saying this for a while now, that the past number of months are a good time to start cycling out of those stocks, the big cap tech stocks, simply because they are so highly valued relative to their overall profits. Think about where the growth is coming from here rather than where the growth has been up to this point. All right, I'm just going to leave it with you at that. I'll have more videos to come. In the meantime, make sure to subscribe to our YouTube channel. And again, follow me on Facebook and on Twitter. Until next time, I'm Jeff Yasteen.